Now we know what a trend is, we know upward trends, we know downward trends. Now it's time for us to discuss support and resistance, how you can easily trade the trend, how you can easily trade bounce, and how you can easily trade breaks. Now we understand how to actually look at the candles. We understand the time frame. We understand currency pairs. And we understand upward trend, downward trend. Generally, looking at this image right here, forget everything written on it. Generally, just looking at the direction the image is moving. All of us know the market is always moving to the right, but it is either up or down. Now we know we have a bullish trend, we have a bearish trend. And I told you there's a reversal point from an upward trend to a downward trend. Look at this. It is going up. Then it got to this place, it reversed. Then it got to this place, it reversed again. It got to this place, it reversed again. It got to this point, it reversed again. Then it got here again, it reversed again. So now, these reversal points have their own names. Now we know there's a trend. We know candles form trend. And candles has formed this upward trend. Then at this point, it hits a point that it can no longer go up. It hits a ceiling. You know, when you're jumping in your room and your head touches the ceiling, you won't break the ceiling and go out. So that ceiling is a resistance. So this point right here forms a resistance. That's what is called a resistance on the top. A point at the top where the candles can no longer go up. They need to come down first. That is a resistance. Then when it's coming down and it gets to a point where it can no longer go down again, when in your room, when you jump up and you're coming down, the floor will give you a support. That is the floor. The support, you can see the candle landed there, the trend landed there, and it went back up again. So it went to the ceiling, that is the resistance, and it came down again to the support, which is the floor. Then it bounced up again, it broke this resistance here, formed another resistance. Then when it goes to this ceiling again, it had to come down. When it goes to this floor, it came back again to form another resistance. So it's safe to say resistance is the ceiling and support is the floor. Looking at the diagram, the zigzag pattern is making its way up, also called a bullish trend. When the price moves up and then pulls back, the highest point reached before it pulled back is now resistance, the ceiling. Resistance level, also known as the ceiling, indicates where the market will be a surplus of sellers. At the resistance, that is where we have surplus of sellers. And that is what brings me back to sentimental analysis. Now, sentimentally analyzing what other traders are doing, you know other traders are selling. Later in the future, knowing what other traders are doing can even help you plan your trade ahead of time. When the price continues to go up again, the lowest point it reached forms a new support. See, it got to this point, it started coming down, then it started going back up again. But before it started going up, a new support has been formed there. This was a previous support. A new support has been formed there. Then you can see it's going up again, it came down. Before it started going up again, another support has been formed there. Support level indicates where there will be surplus of buyers. When there is surplus of selling and it gets to the support where you can't sell anymore, you will start buying. So everybody wants to buy. Surplus of buyers. In this way, resistance support are continually formed as the price moves up and down over time. And in a downward trend, reverse is the case. So you see, this is an upward trend. So if it was a downward trend, it will be going this way. So you can see resistance, support, going downwards. Support and resistance is traded majorly in two ways called bounce and break. Trading bounce. You buy when the price drops towards the support and sell when the price gets to the resistance. See it like a wall. Then you want to bounce off that wall. So when it gets to the resistance, you sell, you bounce back down. When it gets to the support, you buy, you bounce up. When it gets to the resistance, you bounce down, you sell. When it gets to the support again, you buy and bounce up. Trading the break. You buy when the price breaks the resistance upwards and sell when the price breaks the support downwards. Okay? So let's say we want to trade the break. When the price gets to this place, and you've seen a possible resistance here before, and it breaks this resistance, that means that resistance do not hold anymore. This brings us to the end of support and resistance.